Hey everyone, this is Eugene, and today we're going to talk about levels and indicators. This is something that will allow you to improve your odds when you're buying and selling stocks. I'll basically go into the theory, why it matters, what's the purpose, why it was invented in some specific cases, and then, of course, I will give you a practical example. I must say that there are other things in the technical analysis that could allow you to increase your odds, but let's talk about it later. Today, we're just going to focus on levels and major indicators. We will start with the levels. And first of all, what is the level? Why do we need it? Like, let's determine an example of the toilet paper price that was very popular a couple of months ago. And if you open the chart of the price, you will basically see on the x-axis, you will see the price, how it's increasing in this specific case, and you also see the time, right? However, what is important about it and which levels are important here and where are those levels that you should take into account when you place your bids. In order to explain how levels are formed, let me give you an example of Tesla stock. So if you take 100% of shares, 73% over here, I'm not sure if it's 73, but anyway, 73% of the stock belongs to these institutional guys. So it's a minority comparing to the 27. So here we have millions of people that are holding a couple of shares of Tesla, and then you have minorities, so let's say it's hundreds of institutional investors that are holding 73%. It's clear that by the way, for any other stocks, if you will open, you will see that always majority of the stocks are in the institutional pockets, not in the retail market. Then it's clear that their buying power is multiple thousands times more than the crowd, right? And the problems are different. So everybody, both 27% and 73% club, 27 is, by the way, not linked to the Kurt Cobain, Amy Winehouse, and others. It's the other 27% club. So they all have the same aim, is to make profit, right? To make money. Profit is the ultimate goal for anyone. So for a retail investor, it's quite simple, quite simple. So if you buy it at the right level, at the right price, and then the price is going up, basically you can do it instantaneously, right? Because the selling 10 stocks of Tesla or buying 10 stocks of Tesla, it's something that the market will absorb immediately and it's not a problem. So you will be able to commit your profit very fast. So now let's go to the side of the 73%. It's clear that these guys are the market makers. They are actually driving the price. It's not 27%, right? And they have 2 points that you need to take into account. First, the analysis that they make. So when they decide to buy or to sell stock, like recently Berkshire have made with their decision to sell all their airline stocks, it's the analytical decision that was made, right? So they have a fundamental reasons to do that. So they do the analysis. And then, for example, they determine that the price of the Tesla in this specific case in 1 year would be 1,200, something like that, from the existing price. And in order to enter the deal, they need to buy it at the level of let's say 800 to 900 to have some sort of the profit 30% or something like that, right? Now, here is their problem. Because it's a big fund, one of those guys from 73% club, they will need to buy, for example, 30 million of shares of Tesla, something like this, right? However, the average daily volume is only 10 million shares. Again, I don't know if it's correct one, but you see the representation. So if one fund or 2 funds want to buy 30 million of stock of Tesla that will go up for the specific price, uh, they actually have only a supply of 10 million a day. So they actually need to buy all of the stocks of Tesla for 3 days. And only then they will be able to fit their position, which they will hold for 1 year or something like that. However, there are other players on the market that will not allow you to do that. Now, let's take it separately. So the goal is to buy 30 million shares of Tesla with the given target price 800, 900, knowing that in 1 year it would be 1,200, for example. It's the price which they would use as the take profit, and the daily supply is only 10 million, right? Now, let's put it this way. So the price right now, as you can see, 935, right? And that's where they want to buy it. So right now they can't do anything with that, right? So they just have to wait until the price will actually go into this specific range where they will be able to start buying that asset, right? If it will go down, maybe even better. But at the same time, it's clear that if they will open like we do usually when you want to buy 10 shares of Tesla, you basically open your broker, and then you put buy limit or buy market 10 shares, and then it actually happens instantaneously almost, right? In their case, if they will put buy order somewhere over here, buy 30 million shares with the market order, it would mean that the price will actually fly immediately into 1,200 because it represents a super demand, and then that's what they don't want to do. So what they will actually they will start buying step by step. They will start to buy here, 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 all over the place over here, all over the place over here. And then it's going to be a partial order. So it's going to be 100K, 100K, something like that. And then at some point in time, they would also start protecting the price. So they would actually use their shares to put it down, meaning that the price will not break the 900 level and it will stay in the range where they will be able to perform what they want to do, right? So, and this will not take 1 day, it will take, in this specific scenario, if it's 30-to-1 comparison, it will take maybe around 1 week or even 10 days of working days where they will be able to buy it on a higher volumes. That's what actually you can see sometimes, that the volumes are higher when the limit players are buying or selling. So, and then what is important is that the price will start to do some sort of the thing like this in this range, right? And after 10 days, maybe, this player will actually have his position in Tesla for that specific price if everything is going well. Now, let's have a look at the price chart of our toilet paper. However, see, you have levels right now. Now, let me explain you how it was formed. So first of all, level is an extremum, right? Let's take this example. It's clearly the extremum of the price. Why? Because it was going up and then it started to break, right? It bounced basically from this level and then it went down. And exactly the same situation happens over here. So you can count those extremums by doing like this. 1, 2, you have power 2. You have 1, 2, 3, 4, you have power 4. 1, 2, 3, you have power 3. Here it's 1 and here it's 1. What you could have noticed as well is the micro level over here, which doesn't really play a role because it was formed in between two superpower levels, like here. So you can give it 1, but again, it's actually in between the range. So in summary, levels are basically a history of the deals. It's the important points where the major market makers have taken their decision to either buy or to sell. And taking that into account, you should place your bid. Now let's have a look at this situation over here where the level was formed. So level 3 and level 4. You see this zigzag thingy. So normally this is called a consolidation. So it means that some of the market makers were trying to buy the position for a move either to go down or up. It's not very clear in the consolidation, but in this specific example, it's clear that somebody was holding the position to get the asset with a price, for example, from 5 to 4. And then when they loaded the amount of the toilet paper they wanted, the price started to go up. At the same time, you could have the opposite situation that in some cases the price will go down because somebody was offloading the position. Since we are starting talking about the consolidations, there are other two moves are on the market and represents the price. So you have the uptrend and you have a downtrend like this. So this is 2 and this is 3. What is important is that statistically the price is most of its time in the consolidation. In some cases you might have consolidations even for years. Take a look into the example of a chart KHC, this company, and try to do the weekly chart like a homework, and you will see that the price is really almost in the same level and it's in the consolidation mode. Now, what is important is that when you take a decision to buy and to sell, you have to take into account the consolidation. So when the price is consolidating, and it should be a consolidation around a very powerful level for either if you want to buy or to sell. In this specific example, I'm going to talk about the long positioning or buy when you expect a price to go up. And another type of the consolidation, but it's a micro consolidation, it's a bounce. Let's take an example over here. So here it's actually the same story. The price was going down and then it reversed and started to go up. So you have to buy it either in a condition number 1, like I showed over here, or if you expect a high chance for the bounce, you can also make a buy. And it has to be, as I said, a very powerful level. Now, taking our knowledge into account, let's imagine the price of the toilet paper is here, and then you have a question. You want you want to speculate on a toilet paper, and you want this toilet paper to go up. So, if it's a good point to buy or not, right? So, how you need to understand it from the level point of view. So, you see that there was a powerful uptrend, right? And right now it's obviously in a downtrend. So right now, for sure, it's not a good point to buy because the minimum point where it should actually uh, bounce, it's this point. Then, because this level is actually not very powerful, you see it's only 1 over here, let's put it this way, then there is a high chance that the price is actually gonna break and it will go over here. So over here, it's a much more safer point to buy because you see already the level is quite strong. And at the same time, the probability oh, it should be a green one, the probability of this upside is gonna be higher than at this point. Depending on, of course, on the fundamentals, if the company is not gonna go drastically down because of whatever fundamental reasons that are there on the market, this type of the understanding of the levels you need to have. So when you're buying it from the strong level, it means that you have a much better support over here, which will push the price. In order to do this daily routine and draw all these levels every time, basically in appstocky you have that logic automatically created. And in order to set up the levels, let's take an example of Car Avis. So here is the company. So it's a part of the technical analysis. Then you select your stock. Then you go into the trading signals. And then in a support resistance, you will have this part, which will represent this specific portion is representing the levels. So you see levels are here. As well, you see the power. It's resistance 30, resistance 35, resistance 1, and then you have support. So if it's green, it shows you a support, which is down the price, and resistance is something which is above the price. here is exactly the practical example of the car avis stock, right? Where you see all the levels. You immediately see the most powerful ones on a yearly chart with every candle that represents a day, and then you see the other two. So you can see that it was a long period where the price was actually dancing around this level and then around this level, right? So overall, right now, it's just a history, right? So this is a historical consolidation for 2019. Then what happened? The price started to go up significantly, skyrocketing, and it started to go completely down, right? So the crisis and all this kind of stuff. Then the moment it happened, we are again in a consolidation. You see 1513 over here levels. We started consolidation. I shoot a couple of videos about car where where I would made profit here and then profit here. So even in consolidation, you still can make profit if it technically makes sense, right? But then when the price broke the consolidation, you see it went very steep up, and then it broke this level, but then it bounced completely from this level, and then it was not able to hold it again, and now the price is actually in a downtrend, right? So that's the situation. Fundamentally, for this specific chart, I could say that, yeah, I mean, I don't believe that the price of 35 over here and 32 is actually making any sense, because you see that the whole 2019, this was actually the price. Then at some point it started to go up, but yeah, I mean, it's clear that taking into account the coronavirus and all this kind of stuff, the price of the asset might not be so even similar to what was it in 2019. It should be a little bit lower, right? So if this was a fair price in 2019 over here, then okay, this price could be maybe somewhere over here, just a little bit down or significantly down. I'm not an analyst to say what is the most appropriate price for that. But in order, from the speculative point of view, it makes no sense to buy it, for example, at 29 or 35. It's a point where you need to sell, right? That's from the level point of view. Now, what is the fair point to buy is actually at least it's either this point or preferably at this point. So then it would be a good position for a bounce, right? It's going to be safe. And then later with the indicators, I will explain how it can work for you. And the final part for the levels is basically to show you the possibility on how you can adjust levels depending on your needs. So you remember that the settings of the level are here in the support and resistance. It belongs to the settings of the support and resistance levels. So when you switch it on, you see it over here. And then you have some parameters. So parameter auto, it actually the parameter that represents the matching of your initial period. So when you see a graph for 1 year, the levels, the logic will take levels into account for the same period. So it will show you the resistance and support which was formed by the market makers during this period of time. Of course, what you can do, for instance, if you want to show only, if you want to see, for example, only the last 3 months, you can easily adjust that. And then basically the appstocky will take into account only the data for the 3 months, right? So why would you do that? Maybe, for example, you say, okay, it was not a crisis period, so those levels are not important to me, and that's your fundamental decision to do that, right? Like that, you will actually only take into account the recent ones. As well, you see the important parameter, which is the level auto. So this parameter is in fact filtering the levels on the power 5. So it actually filters out everything which is below 5, because those levels are not so important. So it could be a micro level which was formed at some point. However, if you still want to see it, you can remove the auto away, and then basically you see the additional levels if they are over there. So in this specific example, they are not there, so that's the case, right? So you can stick to that, and then you can define the strengths. So in fact, if you want to say 5 is also actually a very big one, you want to start with the 10. So then Stocky will only show you all the levels that are more than 10. So like that, you have all the super major levels, right? But let's get back to the auto. Another parameter, if you want to have more levels and increase the granularity, so in the logic there is a parameter merge. So what it does, it actually absorbs the most important levels and shows you the major one in a specific area. However, if you want to show more, then you decrease the level, for example, up to 3, and then you immediately see that actually those levels are split into the minor levels, right? So you see immediately in this area not 1 or 2 levels, but even 4. So like that, you can adjust your bits a bit more correctly. So you know the higher level destination on where the price is going to go or where it's going to land. And then when you want to take your decision, you might adjust this parameter to see the inner levels that are making sense, so that can adjust your decisions. If you put, for example, it to 1, then you will have a huge amount of levels. Let's have a look. Yeah, just like this. But like that, of course, it's not possible to work because then you're basically in a day trading mode, right? So I strongly encourage you to use 5. That's more than enough for the beginning. And then you will basically see all the important parameters that are there. So this is the end of the first part about the levels. The next one, as I said, is going to be part 2 about the indicators and then how you can adjust all that kind of things together.